We're going to talk tonight about mortgages. We're going to talk about what goes on in the real estate market with attorneys. And we're going to talk about insurance and how we're navigating that crazy situation, especially after we've been back-to-back hurricanes here in Florida. Is it or is it not true that rates went up right after the election?
Yeah, so the night of the election, the bond market went crazy. And yesterday, the day after the election, rates were, it was the single greatest jump since, I believe, March of 2020 in interest rate and in the bond market and the 10-year treasury. Today, it recovered a little bit, but it just goes to show the volatility of the market that we're in right now. It's very difficult to time with political events and international events and those types of things.
A big misconception that I see in insurance for homeowners, and they say, hey, a storm is coming or a storm's on the way or it's hurricane season. Are the rates higher during hurricane season? Insurance for insurance companies. Insurance companies have to pay out so much in claims, but once they hit their reinsurance levels, that reinsurance company, they're paying for everything.
A lot of attorneys and title companies will not order certain things, whether it's an estoppel, a title commitment, a lien search, until after the inspection period, because they want to make sure that the deal's going to move forward. And if you have a 21-day close and you're not ordering your searches until day 10, you're not going to close on time.
Welcome to Making Money with Laura Sanders, a name you can trust. With over 20 years of real estate experience and selling over 150 homes a year, Laura Sanders is the #1 RE/MAX agent in the state of Florida for 2021. Join us each week as we discuss how to make money through buying and flipping homes, to renting versus selling, and everything in between. To join the conversation, call in live. 888-994-4995, Studio A.
Hi, everyone. Welcome to Making Money with Laura Sanders, and I am your host, Laura Sanders. Every week, we talk about something that will help you make a little money, save a little money, or maybe just help you navigate this crazy world that we live in. Today, I am super excited to have 3 amazing sponsors here with me. And we are here at my Airbnb, and we are hosting a party while we're talking about the crazy real estate market that we're in. And we're going to talk tonight about mortgages. We're going to talk about what goes on in the real estate market with attorneys. And we're going to talk about insurance. We're going to talk about, I have not been drinking yet, but we are going to talk about insurance and how we're navigating that crazy situation, especially after we've been back-to-back in hurricanes here in Florida. So here with me today, I have Max Fish with Nationwide Mortgage. I have with me Brandon with Goosehead Insurance. And I have JK Closing Attorneys. I have Charles Esposito. We call him CJ. So welcome.
Thanks, as always.
Yeah. So I have 3 great guys here with me, and we're going to talk about, first of all, we just had an election. I know nobody wants to talk about the elephant in the room. I'm not going to get into politics, but I am going to say that Trump being elected is always good for real estate. I hate to say that, but that's the truth. It is the truth. Everybody talks about the Fed and it lowering the interest rate, but really that has nothing to do with interest rates for mortgages. So, Max, let's talk about that real quick.
Yeah, absolutely. So I think that there's a common misconception, which we've talked about on this show before, right? Mm-hmm. And that is that there's some direct correlation between the federal interest rate and mortgage rates. It's actually not correlated technically at all, right? The Fed mortgage rate is for consumer debt, like car loans, equity lines, credit cards, that type of debt, right? Mortgage rates are tied to the bond market. And so using 6 weeks ago as an example, 7 weeks ago now, the Fed came out and they lowered rates by 0.5%. And it was headline news, go get a mortgage now because the Fed just decreased rates, right? In the preceding weeks after that, there were only a handful of days where mortgage rates actually went down.
Right.
They were up almost every single day after that for a period of 5, 6, 7 weeks. So today there was another federal interest rate cut by 1/4. And we've yet to see what that does to mortgage rates. But if history tells us anything, again, there's not going to be any direct correlation there.
Right.
So that's an important thing to know.
So is it or is it not true that rates went up right after the election?
Yeah, so the night of the election, I mean, the bond market went crazy, right? And yesterday, the day after the election, rates were, it was the single greatest jump since, I believe, March of 2020 in interest rate and in the bond market and the 10-year treasury, right? Today, it recovered a little bit, but it just goes to show the volatility of the market that we're in right now. It's very difficult to time with political events and international events and those types of things. And so, mortgage rates have the ability on any given day, any given week, any given month to either be the highest we've seen in decades or the lowest we've seen in years. So it's extremely volatile. And that's why I tell a lot of clients, if you think that you're going to time the interest rate market, you might not be the brightest person.
One thing I could tell you, and it's kind of funny. I was looking the other day at houses, right? And I'm kind of just flipping through them, and I'm looking at the prices, and then sometimes when you put an address into the house and it gives you the history of how many times the house has been listed, and you see the house and the price, and it goes, this price, this price, this price, and I look and I go, when the right time to buy a house is?
20 years ago.
No.
Now.
Whenever you have money. Realistically, I was just having this conversation with a friend who's an appraiser yesterday. And she said, I was looking at it back in 2006, 7, 8. These people were like selling their homes in short sales. And they, I said, let me ask you a question. I said, these people short sold their homes. It doesn't matter. If you can afford the payment, you shouldn't short sell your home. You should only short sell your home if you lose your job, if you can't pay your payment. You shouldn't short sell your home because your home went down in value 50%. Every single one of those homes that went down in value, every single one, came back more than what it went down by 100% more than what it was when they bought it. So the thing is that you just got to be patient. You gotta live for what you can afford. Just don't outbuy. Now, those people that weren't told, and this might jump over you, sorry, Brandon, this will jump over to the attorney where we talk about understand what you're signing before you sign it. I learned something yesterday that I thought was absolutely wonderful because I just love how when you go to a title company that isn't run by an attorney and they don't understand the contract, I love the fact, how the attorney came back with the title company saying, we're going to put a rush on that. And the attorney came back and said, yeah, we don't have to pay for that. You guys can pay for that. We have 30 days to clear title. And they're like, well, your seller should have thought about that before they signed a contract to close in 21 days. And it's like,
Yeah, there was a lot going on that file.
We weren't the ones that wanted to close in 21 days. The buyer was. So why put that on us?
And the buyer's the one that chose the title company. So
and the buyer's the one that took the entire 10 days to even say that they're okay or not okay with the inspection period.
Right. So there was a lot of things going on there. In Florida, you can use an attorney to close. You can use a title company to close. To your point about maybe attorneys knowing more or less, there are a lot of attorneys that don't know what the heck they're doing with real estate either. It's not just title companies. There are great title companies. There are great attorneys. But there are also a lot of attorneys that don't focus on real estate. So
I wouldn't hire, exactly. I wouldn't hire a brain surgeon to deliver my baby.
Yeah, I think we talked about this a little bit last time we were on as well. And, so when we're dealing with a situation like that, the title company is responsible for making sure the buyer gets a clear title policy, and they have to send information to the seller. When we represent a seller, a lot of times we have to wait, especially for the title commitment from the title company. And then the seller has 30 days to clear title from the commitment that they receive from the title company. When we do a closing and we're handling the transaction, we order our title commitment immediately, whether or not we're past the inspection period or not. So we're our underwriter's largest title agent as well. We get our title commitments back very quickly. So a lot of times we get a title commitment back during the inspection period, and we have plenty of time to clear title before closing. A lot of attorneys and title companies will not order certain things, whether it's an estoppel, a title commitment, a lien search, until after the inspection period, because they want to make sure that the deal is going to move forward. And if you have a 21-day close and you're not ordering your searches until day 10, you're not going to close on time. And if the buyer is the one that chose the company that's making that decision, that's the buyer's fault. And the seller is allowed time to clear title. If we receive a title commitment the day before closing, we don't have to close the next day. We have 30 days to close. Nobody wants to delay a closing, but that's why it's really important to choose a company that actually their systems and processes are able to support the closing. So a lot of agents, like you've called us up, can we close in 14 days? Yeah, we can. Is there an association? Because if there is, we have to get the buyer approved. That has nothing to do with us. It has nothing to do with you. If there's no association, great. What city are we in? We have to look at the municipal lien search. How long is it going to take for that to get back? Title commitment. Well, if we order it right away, we'll get it back and we'll
And
close.
you guys are out the money, right? If you're ordering an estoppel, and some people are like, "What's an estoppel?" Right? It's like, and it's funny, and I don't know if they can hear us out there right now in the outside in the patio area, but right now I have a president out there, and the estoppel he just got back was like $800 for 2 estoppels, and he was like, "What is this?" And I'm like, "You're the president, you should know this, right?" And the thing is that these estoppels are so expensive, and even the people that are the presidents, they don't realize that this is just to say, hey, we're up to date. That's it.
Yeah.
They're charging these ridiculous fees to tell you we're up to date. That's it. That's it.
And that's a statutory thing. Associations are allowed to charge $250 for
And if it doesn't close, who's out that money?
The seller is technically out that money. However, if the association receives the cancellation of contract within 30 days of the cancellation, they're supposed to refund the money.
But they don't.
Sometimes they don't. It depends on what's in their docs. It's very rare. This is why we use third parties when we're ordering estoppels, that it's their job to order estoppels, because they have relationships with property managers, they have attorneys. If you try to keep everything in-house and do everything yourself that you're not experienced at, you may not know how to deal with situations like that. So to your point about, aren't you out that money if you order that early? If you're a title company or an attorney that only does 3 closings a month, you have to pay for everything because you don't do enough volume for your vendors that you work with to have what's called a washout agreement. When we order a municipal lien search and the file cancels, we don't have to pay for it. When we order a title commitment and the file cancels, we don't have to pay for it because we do such a large number of volume with our vendors that they don't come back to us and ask us to have our clients pay for that.
So the realtors need
that's
to
a big
know that
deal.
when they're hiring, when they're picking somebody, and picking title companies that really don't have experience, they're not, they need to know that. So
Yeah,
that's
and
good
I think,
to know.
to kind of segue into letting Brandon talk now too.
Yes, I'm going to let him talk, but I'm going to have to jump him for commercial, and then I'm coming back for him, and it's all you, baby. It's all you.
I know exactly where I want to go with this for Brandon.
Yes. Where are we going with this? Anyway, we're going to go to commercial break, and when we come back, we are going to talk about, we just got hit by 2 hurricanes, and I want to just say, Brandon's been great. He gives us, estimates right away, but let's just talk about how that's getting ready to hurt us. So we'll be right back, and we'll check out our commercials.
Whether you're buying, selling, refinancing, or building your dream home, you have a lot riding on your loan specialist. Max Fish, a top 1% mortgage loan officer in the nation, will give you a same-day qualifying quote. Max Fish is committed to providing his customers with mortgage services that exceed their expectations. Ensuring that you make the right choice for you and your family is his ultimate goal. Contact Max Fish today at 954-729-6933 or max.fisch@nwmcorp.net.
At JK Closing Attorneys, we do all of the same things that a title company does, but with the benefits of being a law office. We can help with residential real estate, short sales, commercial real estate, refinances, 1031 exchanges, and FRPTA withholding.
Contact JK Closing Attorneys today at 954-332-3111. Again, that is 954-332-3111.
You have been watching Making Money with Laura. For more information, contact Laura Sanders at 954-650-0827 or visit her website at theloracell.com. And now back to the show.
Hi, everyone. Welcome back to Making Money with Laura Sanders, and I am your host, Laura Sanders. We're here right now with three amazing men, all different walks of life of real estate. We have a mortgage lender, we have an insurance guy, and we have an amazing attorney, and we're talking about real estate and how it's affecting us right now in different ways. And now we're going to talk about insurance. So we've just got hit with 2 hurricanes. I'm scared. How is this going to affect us? I know you don't have a crystal ball, but I'm sure you're nerdy enough to be reading and looking at what's going on. I think Max is pretty nerdy too. He's probably looking at what's going on. But Brandon, tell us what's going on.
Well, first, let me say congrats for your anniversary on the show.
Yes,
Really,
it's been 2
really,
years.
really
I can't
exciting.
believe it's been two. I mean, okay, I did stay married for 20 years, so I guess I can stick with something. I only made it 2 years my first marriage, though. So.
Well, let's move on then. So, yeah, we definitely did get hit with 2 big hurricanes in the state, and everybody's asking me what's going to happen. But first, I want to talk a little bit about a big misconception that I see in insurance for homeowners, and they say, "Hey, a storm is coming, or a storm's on the way, or it's hurricane season. Are the rates higher during hurricane season?" And the answer is no. So
It's harder to get people to write, though.
well, if there's a storm or a moratorium in place, it can be.
Really? I always thought there were less people writing.
No, not necessarily. But it comes down to what we've talked about in the past, which is 2 insurance marketplaces. There's the admitted market and the non-admitted market. Most homeowners are in the admitted marketplace. A lot of the big homeowners insurance companies in Florida are, and they have to actually file their rates with the state. So it's not like I own a store and I decide I'm going to sell this box of pasta today for $2.50. Tomorrow I'm going to sell it for $3. I'm just going to change it. They can't do that. And so rates don't just change automatically. And so when it comes to are rates higher during hurricane season, well, their rate filings are already in, and they can do midterm or during the year rate filings, but we don't see that as often. Now, to answer your question on what's going to happen, what's the crystal ball telling us? It's really hard to say. What I can say is for a few carriers that I work with, and I work with dozens, they've actually lowered their prices and rate filing year over year. I'm seeing 5, 10, 12% decreases year over year for homeowners insurance, which is phenomenal. We've also had a bunch of new companies come to the state, and one of them in particular that I'm writing a lot of business with them. They're extremely competitive, and I keep on winning with them because they're so competitive on price, often beating Citizens pretty much every time, and even when it's inside of Citizens guidelines. So I think with the election, with the way things are turning, I'm positive, and I have a positive feeling that I think that we might see rates become more steady instead of seeing these big 30, 50, 100, 200% hikes in homeowners insurance.
Do you think that they'll start writing more policies to take that money to pay for this, for what's happened? So they'll come out and write policies now to take that money, kind of like Social Security, right? They collect our money to pay for the people that are collecting Social Security.
Well, there's another tier in insurance. So there's something called reinsurance, which is insurance for insurance companies. And so insurance companies have to pay out so much in claims, but once they hit their reinsurance levels, that reinsurance company, kind of like medical insurance, you hit your deductible, they're paying for everything. And so it's really interesting from a claims perspective. If your insurance carrier hit their reinsurance levels, they're paying out checks like crazy because they don't care. It's easier. So it really depends on their reinsurance rates. That's what a lot of what sets the rates for the end homeowner.
So you're saying we shouldn't really be super worried?
I don't think so. We got to see what the reinsurance market does and how it's affected from the storms. But thankfully, the storms that hit, they've hit a lot of less populated areas. So now if a storm hit, in my opinion, if a storm hit like Broward, Miami-Dade, Palm Beach County, where it's a lot more populated, I would start to get nervous.
Okay. Well, we got a whole nother year, so.
Yeah.
We got a whole nother year. So we have a bunch of people that I think they can hear us out on the patio. Does anybody have any questions? Because on the patio, does anybody have any questions out on the patio? Because first of all, I know that a lot of people like depopulation sounds like a disease. But we do have somebody. What kind of question do you have, young lady in the red?
My question is for Max specifically.
Okay. Yeah, here, hold on. Here.
So Max said you can't time the market, and Laura said to buy when you can't afford it. So I guess the real question was, if I listen to both of you and I hate my interest rate, what percentage drop does it need to be for me to want to refinance and have it actually make sense?
1 3/4.
Yeah, I mean the rule of thumb is really a percent, right? If you can get more than a percent, then obviously
I would never do a percent.
And why is that?
I don't think it makes sense. I think you would have to stay in your house for such a long time.
Well, it's honestly not. When it comes to interest rate and payment, it's not a one size fits all, right? Because if your loan amount is $200,000, it probably doesn't make sense.
Right.
If your loan amount is $650,000, it probably makes sense.
She probably has like a $9 million
right,
house,
but,
right?
But
okay.
and here's why.
Okay, that makes sense, right?
Correct.
But,
So
okay,
here's why. Because a percent, if your loan amount is $650,000, a percent could be $450 a month, $500 a month. So you break even on that cost. Maybe
I don't deal with those kind of people.
18 months or so.
I like normal people.
That's why it's a rule of thumb. It doesn't. It's not a one size fits all.
But I would say most people that I deal with, I would say it's usually about even 1.5% is like kind of pushing it.
Yeah, I mean, it's going to come case by case, right? But again, like the generalized rule of thumb is don't do it. Definitely don't do it if it's less than a percent, right? But a percent or more is typically.
Could you maybe touch on the difference between if they have an FHA and actually need to refinance versus if they can just get a new appraisal?
Yeah, so
FHA is a no-go at all. You're not going to...
Well, with an FHA loan, a lot of times people want to refinance into conventional if they feel like they have enough equity in their home, right? Because their FHA loan, if they put 3.5% down, their mortgage insurance will never fall off. So if they have 20% or more equity in their home and they can qualify for a conventional loan, then it would be advantageous for them to potentially refinance into a conventional, maybe kill two birds with one stone, get a lower rate and get mortgage insurance, and so that would be advantageous for FHA. For conventional, your mortgage insurance eventually falls off. So, if you have the equity in the home and you can get rid of it early and also lower your rate by 1% or more, depending on what your loan amount is, that could be advantageous for those people as well.
But one of the things that I will say, and I guarantee you that there's at least 5 people, if there's anybody left out there anymore, that I know that is a huge misconception, is that a lot of people think conventional has to be 20% down.
Mm-hmm. Yeah,
and it doesn't.
So there's actually an option for conventional that's even lower than FHA, and that's for first-time home buyers. So first-time home buyers for conventional, if they, obviously
qualify.
If they have the credit and income and those types of things, first-time home buyers can put as little as 3% down. So whereas FHA is 3.5%. So conventional, even offers a lower down payment option, but then for everybody it can be 5%, as long as they qualify.
Okay. Well, I wanted to thank you guys for being my sponsors, and I got something for each of you guys.
Oh, thank you.
Just to say thank you. And so this is for JK Closings.
Wow, thank you so much.
Yep.
This is cool.
Yep. And this is for Max.
Thank you.
And this is for you, Brandon.
Thank you.
So I just wanted to let you guys know that I do appreciate your support for supporting me on the show, and that I appreciate you taking time out every month to spend with me and to talk about relative things that have to do with, basically this is all real estate. And I know that, I have other guys and girls that come out to talk about other things that might not necessarily be about real estate, but I do really appreciate you supporting me. And and doing business with me as well, and taking my calls at 11 o'clock at night, or dealing with me when I have maybe a crazy customer. And I don't have any crazy customers. What am I talking about? You guys are wonderful. And I do want to thank everybody for coming out tonight to supporting me for my 2 years of making money with Laura Sanders. And I want to thank everyone that's here in the room. And thank you. And if you want to buy or sell a house, thank you. And thank you to Freddie and Dawn. And thank you to everybody that works on the show. And if you need to buy or sell a house, give me a call, 954-650-0827. And if you need a mortgage,
954-729-6933.
and if you need insurance,
954-326-9842.
and if you need somebody to help read your contract that you don't know how to read,
954-779-5000.
you can just go to my website at laurasell.com and reach out to me, and I will help to get you in touch with anybody that you need.